observe is that, when you talk about consumption, your tilt is still pretty much towards the entire premiumization or urban consumption theme. Would you look at maybe some bottom-up stories? Rural consumption seems to be kicking back in. Should some of those staple plays, which are directly linked to rural exposure or rural markets, also be looked at?
There has been a saving of 1 lakh crore in the budget, and that is saving on account of income tax. There has not been too much of a cut in GST. So from that point of view, out of 7.5 crore income tax filers, return filers, you have around 6 crore people who have an income of less than 12 lakh rupees. Now, these are the 6 crore people who are broadly going to benefit. And these are the guys who don't have to really be very worried about your roti and kapda, which is your food and clothing. So that is the big call, that discretionary spend is likely to benefit more than FMCG. And of course, our finance minister has also alluded to the fact that GST rates are also headed on the downside. So from that point of view, even FMCG at the margin will benefit. And rural economy, in any case, is coming back from the lows. And that is also going to be beneficial for the FMCG place. So all in all, the entire consumption basket is likely to benefit. Maybe you're not going to see the impact only in the March quarter, but next 2 to 3 quarters, right? The positive impact of this is going to be felt because there's going to be a multiplier of this 1 lakh crores. According to the theory of marginal propensity to consume, if you save 20% of this 1 lakh crores, the multiplier is going to be 5 lakh crores. If you save 25%, that's going to be 4 lakh crores. If you save 30%, then that's going to be 3 lakh crores. And mind you, next year again, you have the 8th pay commission recommendations about to come in. And we are talking about 1 crore plus government employees. And, the fitment factor which is being talked about is around 2.5 to 2.8. Of course, that would again mean that salaries of government employees will likely go up by 25 to 30%. So again, from that point of view, we are looking at a situation where consumption stocks are likely to benefit. The benefit is going to be more pronounced, according to me, in discretionary names. And both urban and rural discretionary names are likely to benefit, whether it be tractors, motorcycles, or white goods, or so on and so forth. They are likely to benefit, rural retailing and all of that, as well as FMCG companies, where there's commensurate growth, because the FMCG sector is lacking growth and elevated valuations. If the growth comes in, maybe the valuations will find a floor and maybe even move up from there.
Okay. Manish, fair enough. But then what happens to Capex stocks? Government spending there also will pick up. If numbers are anything to go by, they were down because of election spending. And for next year also, the uptick in GDP in capital expenditure is 10%, which is quite a decent number, right? So what happens to that end of the market? If someone has to choose, let's say, between Build India and Buy India, which is a better theme?
So, Nikunj, you are right. Government is doing its bit on Capex. They have spent 3.1% of GDP on Capex, 10 lakh crores for fiscal 25, 11.11 lakh crores for fiscal 26. Capital formation has gone up from 26% to 30%. That's about it. I mean, we can't expect the government to do almost all the heavy lifting. Private Capex has also to come in. So, it boils down to not the problem about Capex, it boils down to valuation. Capex names which started with 20p and you elevate those valuations to 70, 80p and they have corrected to, let's say, 50p. It's still over. The theme stays good, the growth stays good. That is the major problem in the Capex stocks. The capital goods, the power, the renewables, the infrastructure, roads, railways, defense, they are suffering from a problem of valuation. The biggest problem in Indian markets today is nothing but the valuations. Each individual sector, company stock, if the EPS growth of the Nifty is growing at 10%, you can't really be buying into companies, sectors, industries and more than 3 PG. That's a mistake. We have seen that anecdotally. So the problem of the capital formation stocks, capital goods stock, infrastructure stocks is only the valuation. If the valuation is conducive, even those stocks will do well.
Okay. All right, Manish, really appreciate it.
If you like this video, then like, share and subscribe to ET Now.